Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We have a jam-packed show for you today and a bunch of great guests. I'm Harvey Freed. He's Harry Glantz.
Good morning, everybody. Yes, we do, Harvey. It's phenomenal out. You know what? The weather's back to Michigan weather. You know, it was 75, 80 degrees earlier in the week. Now it's back to 40s. So, yes, the weather's doing exactly what we thought it's going to do.
We're going to get a real great spring here across the way here with the New York Yankees hat, Becky. Well, you got a great collection of hats. Becky Alley, one of the top 1% of all originators.
What is going on? We are pumped up. I don't know if you're pumped up, but we're pumped up in here, and I hope you feel all this energy because we're about to push it out to you for sure.
Here we go.
Tarita Boone joins us. Tarita, you brought the energy. You bring your team in. Of course, Helen Hambrick's joining us also. 1 hour of mortgages and real estate. Thanks for joining us, Rita.
Tarita Boone's in the building.
Yes,
Building's in the building.
So much energy. I tried to already hit on you. I saw that big rock on your hand, so I had to back off. I understand you already got man in your life. But, hey, what a great housing season. We're already off and running here. Just this little break in weather last week, it seemed like a few more calls picked up. Again, it's always a home buying season in Michigan, 365 now, but there are some hurdles out there again, and those hurdles are keeping some of the folks on the sidelines. The tariffs are scaring some folks. Becky, maybe some people coming up with down payment has been a little bit of a struggle. And
so it's scaring my 401k is what's happening. Okay.
Oh, okay.
That's really what it is. But, you know, it's always the common denominator is where the fund's coming from. So when we are pre-approving someone properly, you got to have those conversations. And if someone was taking out of their 401k and they've lost a little bit because of what was going on in the stock market, we're always talking about alternative options for them, whether it's down payment assistance, is it a gift? But it's always about setting someone up for success when it comes to home ownership. And that is why you guys are in the building with us, because you take pride in the guidance that you guys give your clients. So we're here to talk about all the things. We got amazing. Actually, Mizra is going to be coming up with they're going to announce that we are now up in the price points, which is a beautiful thing for our first time home buyers. So I'm pretty excited about that too.
Yeah. And what we're also talking about is that, and we're out in offices, we're out in the communities, we're out doing closings every single day, every day of the week. And the thing that I'm running into, and I was at an office yesterday, had a beautiful closing going on, and I'm talking to all the agents in the office, and you ladies can confirm this. They say there's busy, and they're very, very busy. There's a lot of activity, but housing, there aren't any houses on the market. And if the houses are still on the market, this is what they're telling me. There's something wrong with them, because anything that's really good is jumping off the shelf, right? I mean, that's what's going on. So, ladies, elaborate on that. You're busy. You got a lot of activity. People want to buy, but there's just not a lot of inventory.
Well, let's talk about inventory. Everyone's perception of inventory is a little different. Yes, things are jumping off the market, but they're also a little hesitant, like Becky said, about buying. Like, you know, we talk about the tariffs, we talk about the interest rates. We just talk about just the uncertainty of what's happening right now. So I think that even though that there's some inventory out there, it depends on what bracket of that buyer is it. Are they a new home buyer? Are they mid? Are they in that price point that's 600 and up? So it just all depends on where they're going.
Yeah, you bring up a great point about wherever the market is, wherever the price point is. That's where you could see some hesitation, or you see a lot of activity.
Yes, absolutely. So you know if you don't have that, you know, residual income, or you know you're not in your 401k or whatever that may be, you're nervous. I mean, there's a lot of unemployment going on. You know, federal workers are losing their job. Those are our buyers. Mm-hmm. So if they're uncertain about what their, you know, next paycheck is going to look like, I mean, you can't get a house on unemployment, right? So everyone's uncertain. So it brings this thing that happens. But what I do is I just, you know, I give them this sense of, hey, this is what we're going to do. If you can't buy today, let's set it up to where you're buying in 3 months, in 6 months. What does that look like? So that's what we do at Real Estate by Rita. You know, we're looking at long term. We like the long term. We're not looking for something like right now. No, I mean, that pays our bills, but we also want to set you up for what's to come.
Yeah, we're big on what we say. I say often, and we say it in here. It's not my timeline, it's yours.
Yes.
And it is setting the right dynamic for the individual buyer, because everyone's experience is different. Their financial status is different. What their goals are different. And my GPS is not going to get you where you're trying to go.
Absolutely.
And, you know, dialing that in for each individual person is key. And the price point is completely different. Mm-hmm. You have the 150 price point. You're also, you have the first time buyers that are really going to get hammered again this year because then you're competing with the investors. You have a lot of people coming from the outside in, and I have quite a few at the 500 to 600,000. They are really getting pummeled. It is like, I mean, you're talking multiple offers. I'm talking to the listing agents. They're being very transparent about some of these things that they're seeing. And even when you have multiple offers, a really strong, even appraisal guarantees on a $600,000 price point, you are losing. They've probably written about 10 offers right now. But they're not. But our job is to set the right expectation.
Absolutely.
What are you looking at? What are we doing? How are we going to get there? And it's also all about having that really collaborative relationship with the other side where you're having really strong conversations with the listing agent. I know you are amazing at that.
Yeah, like I mean, Helen will, she can kind of back me up on this because that's the thing. Like, I mean, we do a lot of networking, and we're always trying to say like, you just never know who you're going to see on the other side of the table. So it's like, meeting people and having these relationships actually help because, you can't tell everything that was, you can't say, this is what I have, in my back pocket. Like, this is the highest and best of what's going on. But you can, have an honest conversation. If my client is not going to be able to compete, just tell me so we don't waste our time and I can set them up and then we can look at other properties. So those are the conversations I like to have. What do you think, Helen?
I would agree with you. I agree with you. Yeah.
Let's stick with that inventory conversation. Then let me jump in there a little bit. Definitely that Becky's coming up against it. We all hear in the industry, the 500 to 700, they're getting even cash offers, multiple offers. But the other inventory that's sort of left on the shelf, like Harry mentioned it, some of the houses are struggling. There's a lot that can go on to get those homes sold. And you guys know how to really set that up. So anyone out there thinking about listing their home, if you've got a stale listing, 30, 60 days in the market, you're not getting those offers. It's typically priced, but the numbers came in actually for the first quarter last year. 44% of the buyers out there were getting sellers concessions. So if you got the home with the aged flooring, it's not fresh, the walls aren't fresh, needs a new roof. There's a lot of things that it can need. Those sellers concessions. And if you explain that to your sellers, how you can get more for your house, but in return, we're going to give back to the seller, or I'm sorry, to the buyer to allow them to close on this transaction. Then they can make it their own house. We see that more and more. And again, the numbers are telling us 44% of the first-time home buyers buying in this quarter were getting those sellers' concessions. Are you getting those sellers' concessions?
We are, but let me tell you something. What I do, I'm really honest, especially when I'm on the listing side. Like, let's just price the house accordingly. That's where you get your traffic. Everyone wants to, oh, my house is worth this, and yes, it has sentimental value to you. Yes, it does. But let me tell you what the market is going to say. And if you price that house accordingly, you will get the visibility, you'll get the traffic, you'll get the offers. And then you don't have to offer these seller concessions because
it doesn't have sentimental value to anybody else other than you. So you might as well let's see what we can get. And chances are, if it's priced right, you could get a bidding war on it.
Yes, absolutely.
But if you set it too high, even in this market, if you set it too high, you could get nothing.
You could get nothing. Yeah. And guess what? It's sitting longer on the market. I tell people, here's the thing. You're going to pay more utilities. Your taxes are still going. If you just do it now, let's just move on. And if you move on, then you're getting what you want. Because you want to move on. You probably already have your next house set up. And you're sitting in your house waiting for it to sell. Or now you're sitting there paying 2 mortgages. Why? Let's just price it accordingly and get the price. Just price, people. I just can't stress that enough. Like, we have a lot of those conversations.
Okay, so to our listeners, it is a real conversation.
Yeah.
Because everyone does think their house is worth more than what it is. And it's a different market, but the market will determine what the price is.
Absolutely.
And it is what it is. So that's why you have to be with these real professional, a real estate professional. It's what they do all day long, day in, day out. This isn't the part-time gig. And even if it is a part-time gig, it's okay. But you have to listen to your professional because that's why you're hiring them. There's a difference between price and value. What someone's going to pay and what it's worth are two different things.
Absolutely.
And we're getting into a very competitive market where someone is going to pay because it is worth something to them.
Absolutely.
And if they have the money and they have the pockets for it, if I'm going to win an offer, you're not going to beat me. If I want it, I want it.
It's a very long-term situation right now. Very rarely is anybody going out there saying, okay, we're going to buy a house, and they get their first offer that they've ever offered on a house if they're a first-time home buyer accepted in this market. It's just not happening. So when Becky says, and when we talk about it all the time, it's the long term. We'll set you up. We'll plan it out for the long term. There's no hurry on our part. We just want to make sure that you're all prepared So when you go in, you've got that approval letter that says, and we have all your stuff. We don't issue approval letters, just write them out. All right, you got to go through all your stuff. And I say stuff. Stuff's a mortgage banking term. Get us your stuff, and we'll make sure that you are set up for the long term, because it could be 4, 5, 6,
It could
7,
be.
10 different offers that you put in. And that's not unusual in today's market.
But it's setting someone up for success, right? If you have the difficult conversations now, then it makes the little conversations super simple.
Absolutely.
And when you set someone up for success, you're telling them the hard conversations. You're saying, "Hey, we might go in a little bit tight. We're going to be high and tight real quick. But if we have the right relationship, sometimes where offers will get accepted and you're not the best just because your name is on that offer.
Absolutely.
And our name is on that letter because who you work with matters. And there's a lot of people running around with these pieces of paper, and we talk about it often, that really don't mean anything because someone did not truly verify their income, their assets. And when I'm having a conversation with a listing agent, you better know I've looked at all of the things.
Hey, I'm so angry on the inside
All
when I
the
hear
things,
about
yeah.
that.
The stuff,
okay?
yeah.
I'm
The
so
stuff. I look
angry
at the
when I hear
stuff.
that stuff. And I hear people going out with letters, and then Harvey will walk in my office. You're not going to believe this letter, some other lender. I go, hey, Harv, let's just deal with what we got to deal with. We'll take care of it. And quite often, if we are the second or third call, we have to unravel everything that was done before, make sure people are straight, and we'll get you going.
Listen, we might not be the first couple, but we're going to be your last.
No question.
How about that?
I like that. I'll take it.
Hey, guys, we're up against our first break already. Again, it's the Hardcore Mortgage Real Estate Business Show. We take your calls live, 248-539-9797. Wait a minute. You want to buy a house, but you already own one? We will give you some options on how to get that new house. Keep it here on 97.1 The Ticket. We'll be right back. Welcome back to the show. It's a Hardcore Mortgage Real Estate Business Show in our 25th year, brought to you by Capital Mortgage Funding. We are powered by CMG Home Loans, NMLS 1820 Equal Housing Lender. You can call us at 1-800-LOW-RATE, the best mortgage banker at any time. We take your calls here live in the studio, 248-539-9797. Tarita Boone joins us, and Helen came in, and of course Helen Hambrick is with Dorita's team here. And you got a whole bunch of folks on your team. Again, if you can't get to an appointment, you've got a team. And that's been a really thing that's been a little bit newer in real estate. I'm going to say over the last 5 or 10 years, the team building, the always learning from who you're working with. And that way you guys are responsive to your clients and you can serve all the needs of the sellers and the buyers. Tell us some other things that, the trust and everything that's involved in a transaction. We got sellers out there, as I teased at the thing. They want to sell their house. Some of them can just buy. They can keep their current house and buy minimum down and change things up. Tell me some of the hurdles you guys are running into with some of these buyers.
Here's the thing. We talk about these honest conversations, right? We talk about the unemployment. We talk about what's happening in the world today. They are, especially when it's a first-time buyer, they are not sure of the process, number one. So we have to get them through the process and understanding. And you know what another thing is?
Tell us.
These buyers will call a listing. I'm like, that's what I'm for. That's what you're paying me for.
Yeah,
They get so excited. They're like,
Yeah.
oh, Rita, I call this house. I call this agent on this house. I'm like, what are you doing? So a lot of it is the conversation. Hey, I have you. If you need something, we got you. So a lot of the hurdles I'm going to say is that just making sure that they have enough money. Because sometimes people come out, new home buyers, they just think, hey, I'm going to buy a house. Mm-hmm. Okay, but how much money do you have to work with? Nothing. Well, okay, let's set that up. Let's see what that looks like. Let me see, what your income looks like. Even before we're getting them to the lender, I kind of, I don't want to waste your time either, Mm-hmm. So I'm just saying, what do we have in your bank account? What are you making every week? What kind of bills do you have? Because before I even hand you off, I just want to make sure that we're in a good place.
Well, really, it starts at the back end, doesn't it? It starts at the back end of the transaction, Becky. That's a question that nobody wants to have with somebody. Somebody says, I want to buy a house. The real first question, and there's no delicate way to put it, well, how much money do you have to put down?
Yeah, it's the Jerry Maguire, show me the money.
Right. How much money do you have? Because that's the biggest part of the transaction that we find on our end is that where's the down payment money coming from? And then we have to verify. So, Becky, take it from there. Somebody calls you up. They have that conversation, like she says, and they might have a little bit of money, but not a lot of money. There are things that we can do for them.
Yes. And before I get into that, I respect that you really do the deep dive with your clients, because a lot of times in real estate, they're afraid to have those conversations because they think it's offensive. But reality, like, my highest and best use is once you tell me all the things. And let's be honest. Let's be transparent with each other. So we reverse engineer. If you are renting, it's very easy for me to identify what kind of payment you can afford. But oftentimes, the 3 biggest first-time buyer mistakes, I always say this, is you don't keep enough money in the bank because you think the banks are out to get you. You think you have to put 20% down. And the biggest first-time buyer mistake, or even repeat buyers, they don't even try because they think they can't afford it or they think they qualify. But when it comes to funds for closing, you do need money whether you're doing down payment assistance or not. A lot of these down payment assistance programs, you have to have at least 1% into the transaction. That's the minimum, but that does not mean that's all you need. So a lot of times, even if you're getting the state of Michigan program on the top in the state, one of the top here, you get $10,000, but you still might need $4,000 to purchase the home, depending on what your credit score is. So we have to figure out, where is this coming from? Do you have a 401k? What is the timeline for you to save that money? Or can we get concessions? And a concession is when you're asking the seller to pay some of your closing costs. So if we have a deep dive in a discovery conversation in the beginning, it makes the whole transaction, once we are under contract, seamless. But you can't hide the things. But you do need money. You're going to have at least, I would say a good standard is at least $5,000. Let's start there, because we don't want you depleting your entire assets to buy a house, because things happen. And I want to set you up for success, because it's not just 5 minutes, it's 5 years down the road. What are we doing? Where are we going?
What happened to me yesterday was one of the best closings I ever had. I met a guy that called in the radio show, and we had the name and number, and I met him on the phone 45 days ago. Found the first house he really looked at. He found it's the best house I think I've ever been in. I've never been so excited for someone. got the Mishta money. Again, total out of pocket on $185,000 purchase turned out in Redford Township. A one-of-a-kind, gorgeous house, completely updated. His total investment was $3,300. And so often we talk about $3,300. He's a homeowner. His payment very similar to where he was renting, Becky.
Yeah.
I think it was like $1,400 all in, taxes, insurance, everything. He can rent a room in this house for $700 if he wanted to. 2-car garage, driveway, just unbelievable. And we've talked, and you know this, Tarita, to rent. If you want to become a renter, that apartment building wants 2 months up front, right? Then a security
Rent is more
deposit.
difficult than home ownership. I'm going to say this right now.
I think
Yeah.
so.
We used to joke about it,
Yes.
but Tarita, it's the truth, right?
It
Helen? Come on,
is.
we see that.
It is.
Yeah.
Helen actually has you.
I've had a different experience on the other side where a client had more than enough money and was afraid
Yeah.
to purchase and decided to keep renting. And I tried to talk.
You did.
Mortgage broker tried to look, it's safe, it's okay, and he just
Okay,
did
so
not.
to that point.
He didn't want to be $1 over what his rent was.
Yeah, he had this. He had this number in his head. He had a number in his head, and he just did not want to go over that number.
Well, we're blessed to be able to change people's lives through home ownership and real estate.
Yeah.
But what you're talking about is what we're just, kind of like what I was alluding to is sometimes the ones that qualify think they can't, and the ones that can't think they can. But you have to try, you have to have the conversations,
Yeah.
but it's finding out what's his pain point, right? Because you're either running to or towards something.
Yeah.
Or away from something or towards something. And, I'd rather park my own car in my own driveway.
Yep.
And it's helping someone see something that they can't see for themselves. And we get to be a part of that every day. And I love it.
Yeah.
Absolutely. That's the thing. It's like every time I get someone into a home, and that's the thing. And I always say, we talk about all the time, like most of my clients become my family. They really do, because I'm that invested in them being happy. I'm that invested in seeing them like light up as soon as they get that key. They open the door, they start decorating. Like that is what gratifies me. Well, the negotiation part does too. I'm not even gonna lie. But
because you hate to argue. Because I can tell that right away.
well, I'm a little spitfire sometimes, but
I like how Helen brought that one individual buyer up. He
Yeah.
just wanted his payment to be so close to rent. It's like now we got to bring in all the aspects of home ownership,
Yeah.
wealth building in the future, the equity opportunity, the tax write-off.
Yeah.
It's almost like, hey, man, do you got a financial planner? Hey, Mrs., do you have a financial planner? If not, now I want to partner these clients up with a financial planner and say, look, let's put a life plan together here.
Yeah.
Let's really talk about the dollars, the cents, where it can all come from, because there's no doubt home ownership's the way to go. I've never met a renter who got into a house and then called me up and said, Harvey, I made a mistake. It's just never happened.
Yeah.
And again, even the folks that were in trouble in 2008, 9, 10, Harry, as the housing debacle was hitting, the folks that hung on to their homes,
Yeah.
we gave that advice. We said, we know your $200,000 purchase is worth $120 now.
Right.
Hang on there. Those homes today are worth $350.
So we talked about that on the radio at that time too. When people were handing over their keys, they were leaving keys on
Short
the
sale,
counter. They were
garbage,
leaving
stupid.
short sales,
I never could
foreclosures,
understand that mentality. I never.
and they didn't want to pay. And we said, listen, you got to hang in there because, like we said before, this real estate's a long-term play.
It is.
It's not short-term, and people build wealth. Listen, if you bought a house in the 60s, it was worth more in the 80s. You bought it in the 80s, were more in the 90s, so on and so forth, decade after decade after decade. Can there be a few blips in the radar?
Absolutely.
Yeah, but no. I mean, over time, if you're in a house or you buy a few houses, that's how you build your wealth. And Becky will tell you that if she could do it all over again, Becky, this is the greatest Becky story ever. I'd buy a duplex and I live in one side, I'd rent the other out. And then I would keep it. I would buy another one and I'd buy another one and I'd keep going. And I wouldn't never sell a property that I lived in. I would just keep trading up. I felt the same way. I should have always held on to the houses I've had before, but you can't predict the future. But if somebody would have told me, gave me the answers to the test, I would have said, you bought that first home, go ahead. Don't sell it, rent it out, and then buy your other house. And this is what people are doing. Easy to say, tough to do. You can't predict the future.
Well, so I'm glad you brought that up because it is because you're seeing a lot of that right now. Like you're frozen in fear over what we're not sure what's going to happen. There's a lot of buyer fatigue. People are like concerned with where we're going, and it's almost like when you can see the patterns happening again, and you're either frozen in fear or you're moving with faith. And If you are trying to change your life and you want to stop paying someone else's mortgage, we're going to help you. If you are in the wrong house because you overbought in 2020, we can help you with that too. But we're here to guide you. We're not here to sell you. It's your timeline. It's not ours. But if I could go back, like you said, in 2008, you either gobbled up those properties or you didn't. And there's the same situation happening right now. It's a little bit different, obviously, but like these are well-qualified mortgages. The average home has at least 40 40% equity in the home. Like these are well-qualified mortgages. So if you're waiting for the housing market to crash again, it's not going to happen. I mean, 4 times in the our nation's history, or 6 times, we've had a negative equity situation, and we're looking
for a very
at
short period of time.
So we're still in an appreciating market for sure.
All right, when it comes to affordability, the price of a house is one thing. How to make your monthly payment, a mortgage payment, maintaining your lifestyle, that's another. We get you set up for success. Give us a call, 248-539-9797. We'll be right back. Welcome back. It's a Hardcore Mortgage Real Estate Business Show. We take your calls, 248-539-9797. Call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. When experience counts, call the best. Definitely need that. Tarita Boone, she joins us here. And, of course, Helen came in and from the office. And you can be reached locally, of course, Tarita. We'll give out the number a little bit later. If you call us at Capital, we set you up with all these great real estate agents. Let's go off to our call this morning. And we got Teresa on the line. Good morning, Teresa. And what's your question?
Good morning. I had a question for the realtors. I've been interested in purchasing a new home for some time now, but have held off because of the interest rates. I wanted to get your opinion as to how long I should continue to wait before I purchase.
Don't wait.
Don't wait.
What are you waiting for?
Don't wait.
Let me tell you something. Everyone's really nervous about these interest rates, but I'm going to tell you, these interest rates are not bad. You know, if you go back to 70s, the interest rates were like in double digits. So even if it's a little bit higher than the 3%, the 2.5 that you had seen in the past, guess what? Let's find you something that you want. If you want something, what are you waiting for? And then if you think, oh, you know, the interest rates went down, let's refi.
Right.
That's what this.
Don't wait.
Yes, go get what you want. Please don't wait. And if you are looking, you can always call Real Estate by Rita. 734-308-2919.
That's always a good one.
No, and it's an excellent call because we hear this all the time. And I'm going to, I bought my first house in 2006. And that was coming right off of the double-digit interest rates. And at that time, the rate I got, it was a 6.25, and I was touched by an angel with 6.25. And the interest rates right now are emulating that. It's very easy to identify that price point that you want. But what Rita's saying is we have to focus on locking in the price of the home, because that is what's going to continue to go up. And even if you bought a house last year and you're at 5% appreciation, that same $200,000 house is now 210 effortlessly, and you did nothing but just own it. So the interest rates are arbitrary. If you can identify and lock in a price of a home with a payment you can afford, when these rates move, we can always slide you right down. And that's really what you have to focus on. That the interest rate really, it's a piece of the pie. It's not all the pie.
Teresa, because we got you on the line, let me just throw a question at you. Are you currently renting, and what are you paying rent? Just curious.
So I own a home that I was passed down about 10 years ago. I've just outgrown it in size. So I just need to get something bigger, but I've just been so hesitant to do so because of the interest rates.
Well, it's free and there's no obligation, so we're going to have Tarita give you a call after. What we're going to do, Tarita, is break down and market analysis of the current home she has, see what those numbers look like, and then we can qualify her moving forward. Teresa, I think you made a great call this morning. We'll get you set up the right way. Thank you.
Thank you. Have a good day.
All right, look for our call later in the
And I want
day.
to dive on that too, right? So she has a home right now. It's free and clear is what I heard. And she wants to purchase another house. So let's just say you have someone that is not a first-time home buyer. Your minimum obligation would be 5% down. But if you have equity, you can put 20% down if you choose, or whatever it is whatever your profile is for you, that's what we're going to deep dive. But the minimum is 5%. But we also have programs where you do not have to be a first-time buyer. And you can still get down payment assistance. So it's all about having a high level conversation with a high level loan officer that's going to figure out where you're going and how we're going to get you there and what is your timeline, because that's really all that matters. There's no pressure here.
Yeah, the longer you wait right now, the longer you wait, foreseeable futures, you're going to end up paying more. Right? Now, in her case, she could sell the house too. If she's going to sell the house, she's going to get more too, but she's going to end up paying more on the other end.
Yeah.
Waiting is never, and I'm not telling people to jump in. We know how this works. We want you to be able to afford the property that you're getting into. But if you're waiting just for the sake of waiting to see if things are going to come down, most likely foreseeable future, low inventory, a lot of buyers out there. Here we go. Competitive marketplace. You're going to end up paying more in the long run. Now, like you said, if you think 6.5%, 7%, 7.25% is a high rate, which it's not. It's only higher than what happened in the last 5
Exactly.
6 years.
Right. Well said.
It's not a high rate.
Not at all.
In general, you can always, rates are going to come down sooner or later. They're not going back to 3.
No.
I'm going to tell you that right now.
Repeat it.
Yeah, they're not going back to 3.
That's not happening.
Not going to happen. But could they go down to 5.5? Could they go down to 5? Okay, so if you took a rate at 7 and it goes down to 5.5, we're going to refinance you anyways. So waiting right now, that waiting game, I'm not seeing it short term. I'm not seeing it.
Right.
Well, it's human nature to wait, right? To like everyone else is doing. Like you're standing in line. I don't know what you're standing in line for, but now I'm going to stand in line with you. And if you can get yourself out there right now and avoid that unnecessary competition that's very prevalent because there is a lack of inventory, what do you think is going to happen when the rates are do go to the high 5s? An influx of another round of buyers are going to be coming in with the 0 houses that are on the market to be able to sustain that level of buyers. So like the builders are trying to build fast enough. And, so take that in consideration, because you're going to be locking in a price of your home less than what someone is going to be stepping into. And then you're refinancing, and then you're looking at everyone that's still standing in line, and you are in your home now.
I got so much written down here that I want to dive into.
Get
And at
into
first, I'm
it.
like, what are we going to talk about today? A lot. There's a lot to talk about. Well, one of the things before we go into this great open house you guys got
Yes.
definitely was the PMI. So when you put down less than 20% down on a house, on an FHA loan, they call it MIP. On a conventional loan, let's call this PMI. So as Harry mentioned, we're going to refinance you probably as most of the buyers are putting less, first-time home buyers, even second time. I want to invest my money. There's people that want to buy the market on the low. There's people that want to put money into CDs and money markets and set up annuities. So I did some calculation yesterday, 5% down conventional purchase. The PMI is only $75.83. I did this on a 10% down conventional purchase. So if you just had, and the credit was 760, not 780, 800, just very good credit, $75 a month. You have to pay PMI. You can get into a house for a little bit out of pocket. You pay this PMI. A year later, you get a lower interest rate. They drop the PMI. I don't want to throw a whole bunch of too much information out there, but a lot of first-time home buyers, as we talked to them, they just don't know what it looks like to refinance, Harry.
Yeah.
So
that's a lot of mortgage lingo right there, Harvey.
It is
That's
a lot of mortgage
so
lingo.
the truth of the matter is,
Save money,
yeah.
save money, make it easy.
So to kind of bring it around full circle is if right now our 401ks were getting hammered. And if you're not wanting to pull that asset out because once you take it out, it's now a loss, let the finance work for you. That $76 a month is going to keep that $20,000, $30,000, $40,000 in your bank account.
Exactly.
Don't take it at a loss, finance it. Then we can always replenish it once the equity in the home because it's going to be there because that's just, we're in an appreciating market.
You guys, before we go into this call, stay on the line, Frank. We're going to go to you in 1 second here. Let's talk about this open house. Okay. You guys got an open house here locally.
Yes.
So tell us a little bit about it. It's tomorrow, Sunday, and it's a great house. Let me give the address, and then you guys talk about the house. 17347 Lincoln Drive in Southfield. Again, get in touch with us, and we'll get you over there. Light refreshments, always. If you're an approved buyer, pre-approved buyer, we're going to have people there that can help you. Tell us a little about why this house is spectacular.
Okay, well, it is a brick home. It's a ranch. It has a 2-car garage.
Ooh, a ranch.
Yes,
That's
a
a
ranch.
unicorn right there right now.
And it has a basement. It has a basement,
Bam.
full basement, 3 bedrooms, a bath and a half. It's an open floor plan. When you like when you walk in, you can see the kitchen, the living room. It's a great space. It's a very nice house.
You got a few pictures
Very
here.
nice
It's really
house.
pretty.
Yeah, and it has a sunroom.
A sunroom also in the
It
back.
has a sunroom.
All right, so
yeah.
there you go. You can get into a house like this, $310,000. Again, we talked about Michigan increasing their availability on their purchase price. So this is one of the many houses out there that families can move into. It's more of a move-in ready to go.
Yes, it's move-in ready. It's ready to go.
All right, lots of homes on the marketplace. Be sure to give us a call, 248-539-9797. Frank, you're calling in and thinking about refinancing. Go ahead, sir.
Well, I'm calling in because I bought a house it's been about 3 years, but when I bought the house, the payment was $1,250 a month. It's in Lincoln Park, Michigan. It was $1,250 a month. My percentage rate was 5.8, and then they came at me after like a year, a little bit over a year. They came at me and said I didn't have enough in the escrow, and they raised the payment. It went all the way up to $1,710 a month, and then it went back. Now it went back down till it's like $1,623 now a month.
Okay, so what you're describing is a very typical, when you buy a house, you're buying it at someone else's tax rate. That first year, it's going to uncap, and they're going to take all their money right up front. You're going to look at least a 5% increase on those taxes. So that's why your payment did go up. It's unfortunate that someone didn't have that conversation with you because you wouldn't have been so starstruck with that new payment. With you being at a 5.875 rate, is that what you said?
5.8.
Yeah, so you still have a good rate. We can definitely look at as far as what does it look like to refinance to help you maybe reset that escrow and kind of reanalyze that. But you have a really strong interest rate. So I'd want to kind of see if that would make sense for you to do that or not do that. Because you're just looking to refinance to see if you could, I'm assuming lessening the payment, correct?
Yeah, because I ended up almost walking away because that payment for where, it's almost $1,700 a month for that house where it's at. That's insane. It's crazy.
Yeah, but Frank, let me answer this question. How much of a mortgage do you have? What's the balance, and what do you think the house is worth?
Well, I did get assistance. So, when I bought the house, I think it was like 171.
Okay, and you did the down payment assistance through the state of Michigan, I'm assuming, for that interest rate about 3 years ago?
Yeah.
Okay. Yeah, so if whatever you pay off, there's going to be that $10,000 that you'd have to pay back. So it lays dormant when you take that down payment assistance. You don't pay, you don't even think about it. But when you sell or refinance or you want to convert it to an investment property, that $10,000 will come due. So that also is something that we have to take in consideration. We're going to analyze your financial profile to see what is going to be the best step for you in this situation. So let's look at we'll do I think it'll be helpful for you to see where you're at right now versus if we did a refinance, reset that baseline with the escrow account. Is there really going to be a tangible benefit for you? Because that's really what it comes down to.
Frank, can I ask you a tough question? And my panel might look at me like, Harvey, why you open up a can of worms here? I'm just curious. Where did you find your lender at? How did you get to the lender? How did it all start?
Okay, well, it was through my cousin. My cousin works for a lady that sells houses. I mean, well, she's a realtor.
And your cousin was in the industry for over 5 or 10 years and didn't have any of these conversations with you, or do you feel like if you had to do that all over again?
She was like kind of like her secretary, like she did a lot of running for her and stuff like. So she just put me hooked me up with her, and I mean, being through like family, she knows my cousin for a long time. You know what I'm saying?
Yeah.
I'm going to jump in right now because Harvey knows where I'm going with this. The bottom line is what Harvey's trying to say is somebody should have told you that the taxes are going up right away. So that's the whole thing. And when Becky says, payment shock and everything, you're not going to pay the same taxes as the people that live there that sold it if they bought it for a lot less than you did. So the taxes were going to go up for sure.
Well, I hope you can hang in there.
I hear you on that, but I mean it's just drastic. You go from $1,200 to $1,700. That's almost $500 up.
I'm with you.
Yeah, sometimes
I'm
if you're
with you.
buying, let's just say if we're buying grandma's house and she's lived in Lincoln Park for 20 years and now that property's available, you're buying it, now your taxes are reassessed at, today's price. So it is a common thing, and I actually really appreciate your candor because this is another topic that does come up for the first-time buyers, that there's not a deep dive on what that payment's going to look like.
Yeah.
There's the now payment and then there's the later payment, and you always have to make sure we're having those conversations. So we're going to call you after the show. We're going to figure out what we can do for you, and we're going to make sure that you feel calm with your current situation.
Yeah.
All righty, keep it.
I appreciate it.
All right, thank you so much.
Thank you, Frank.
All right, thanks for the call. Keep it here on 97.1 The Ticket. We've got another segment for you, 248-539-9797. We'll be right back. All righty, welcome back. It's the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We'll take your calls in the last segment. 248-539-9797. Keep it here all day long. They got draft talk. We got Pistons tomorrow, and, of course, a lot of Pistons talk. Mark Ryan and Pat Caputo, they'll be joining you right after our broadcast here. I think they're down at Comerica. And there you go. I got the thumbs up from Paul. I got it right. And again, we have open lines, 248-539-9797. Tarita Boone and her team is here. Of course, Helen
Real
joins
estate by
us.
Rita.
Oh, okay. You can find her making real estate fun again, building those relationships. And really, again, that was an interesting call we had because if you're not hooked up with the right people, folks, it's a mystery game. And stop clicking buttons. Get referred by somebody, meet the lender, and find out. Also, one of the things, I think I'm offending the younger crowd. The first question people are asking me is, what's your rate? The interest rate can change. And again, we're going to talk about that a little bit here. There's some news out there that we got a trade war going on. There's tariffs going on. Well, that makes the market really volatile. If you're not following this on your CNBC and stuff, you're talking about stock market, 1,200 points down. The next day, 1,200-point gain. And this is a crazy market right now. Don't worry about the interest rate. Buy the right house. Build the confidence. And when you work with us, CMG Home Loans, Capital Mortgage Funding, we have a program set up for you. When it's ready to refinance, you can come back to us and refinance. You'll get discounted closing costs. You'll save money, get a great low interest rate, and set yourself up for the future.
Listen,
Simple as that.
We've been on this roller coaster for 35 years. So this is nothing new.
How blessed are we for that?
But we have our seatbelts on. We've got that bar that
The
goes
harness.
over.
The harness here, yeah.
You know that bar that goes over
the roller
you?
coaster.
The roller coaster ride. Yeah, but here's the thing: we don't close our eyes and scream when we're going up and down the hills. Because the first time we did, but over 35 years, when you're on that roller coaster, you lock in and you're ready for the ride. And what the ride is telling us right now is that this is a volatile time, and people think that rates are associated with the economy, but it's not only the economy, it's inflation. Prices go up, inflation, that dictates what what Jerome Powell, the Fed secretary, the Fed chairman, is going to do. Right now, he's saying, if you read it, you don't have to even read the tea leaves because he's coming out and saying it. He is not lowering rates right now. He is waiting to see what the status of inflation is. Sole purpose is inflation. That's it. So if you think rates are coming down right this second, they're not. We can always hope, but hope is never a good strategy. You have to plan and plan. Listen, if you plan for that bad throw at first base, Harvey.
Yeah, you're ready for it.
You got a better shot at picking it up. Not everything's going to be a perfect throw. We all know that. So listen, you got to do what's best for your own individual circumstance. You can afford it. Let's do it. But you're not going to find a house. You're not going to put in that one offer and get accepted right away when there's 10 people standing in line in front of you.
Yeah, the one thing that's not going down is rent. And homeownership does not have to be a scary thing. Whatever horror story your cousin's brother, sister's mom's dog told you, that was their experience. It's not going to be your experience as long as you're in alignment with the right people. And we've done a thing or two around the block a time or two. And so we've seen it. We've experienced it. We've bought and sold houses ourselves. We've did the right thing at the wrong time. But it really comes down to over and over again, the best time to buy is when it works for you individually as a person.
And that rent thing, Becky, I just had a new client last week, and he's ready to buy because they went up $285 a month on his new lease.
Yeah. There's no regulation. They can do whatever they want.
Yes, absolutely. But, and I said, they're trying to make up. I mean, there was a time where people weren't paying rents and things like that. So, I mean, that's good for me because I have a new buyer. But I'm just saying, you just have to really think about this rent thing. Like, do you want to be in something where you possibly can be set, you build equity? Yes, there may be some, reassessed values. Your mortgage may go up, but you're invested in you and not someone else.
Hey, you guys, I'm going to go off to this call. 8:51 if you're just joining us here on the Hardcore Mortgage Real Estate Business Show. Jared calling in from Royal Oak. Thanks a lot, and go ahead with your question, sir.
Hey, how are you guys doing?
Morning, how are you?
Good morning.
Good. So I just had a question. I've been through the home buying. I went through the home buying process it was like 2 summers ago. It was like a nightmare.
What?
And what I'm calling, I'll tell you why. I'm calling because I want to pick your brains of the best advice you could give me to get the house. The long story short is I put many offers out on houses. I had to outbid a lot of people, and I lost a lot. And then there was a house that they were asking $280 in Royal Oak. I ended up getting the house offer accepted, but I had to go up to $325, and the interest rate was 7.125%. I've done the escalation clauses with stuff, but long story short, that house that I got my offer accepted on, I walked away from it because at that time, with my funds, the payment was just too much. I'd have to just liquidate a lot of my savings. It just wasn't worth it to me. Too much money. So one of the ideas I thought of, because I want to do it at the end of the day, the goal is to get a house, and I wanted to hear what you guys think about this. I'm thinking, why should I have a realtor? Because if I go to the seller's agent and I say to the seller, I'm representing myself, I would think that they would love me because they double dip on the commission.
Maybe
Okay,
that's
let me ask you a
I want to
question.
hear what you guys say.
I
because
love this.
and
Rita, you go.
disrespect-
I'm gonna go.
No disrespect to any realtor.
Oh no, absolutely not.
No, I'm just because at the end of the day, I'm trying to get a house, and when I went through the housing market, I say it's a nightmare of experience because one thing I learned, not with my person that I was using, not with my agent, but the seller's agents, there was a lot of lying out there. They would say something, we're taking last offer by this deadline, and then I know you guys know what a burner account is, right?
A what
You know
account?
what that is?
A fake account.
A burner account.
Yeah, for sure.
So you had a fake account to
fake
message
account.
the agent
Oh,
to
boy.
ask them questions, and they don't know it's really you, because then I caught, they get caught in lies.
All right, so
I
we
love
gotta-
this.
Jared,
Let's get into
we gotta
Rita.
let us jump in here.
I'm gonna go very to
Your advice is
Okay, yep. So
the best way to get the house.
gotcha.
I'm going to go to the very beginning. You said, why do you need an agent? Number one, think about if you were in a court of law. Let's just think about it like this. And you are up, and this may be extreme, but just think about it this is extreme for me. You are up for murder. Do you want your own attorney, or do you want the prosecutor that is representing the state that already thinks you're guilty to represent you? Which one do you want?
That's a little. Oh, he's on hold. Wait. We'll bring
I mean,
him back.
but it's,
Paul.
I mean, that's
Yeah.
that's
It's a
how
little
it's
drastic,
drastic.
but maybe.
But that's what it is. So you want someone to
All right, Jared,
represent
you're back
you,
with us.
and you want the right realtor to represent you. And unfortunately, and this is no dig to whoever you had. It just sounds like there wasn't a deep dive conversation in the very beginning. And also when there's a buyer, a seller's market, and you're paying above asking, guess what conversation we would have had? Do you really need to live in Royal Oak, or can we go around the perimeter? What does that look like? Can you do a fixer upper? What are those things that we could do to get you what you want? Maybe you can't have everything turnkey, but here's the things that we can do, and I can set you up with contractors that can kind of do this work, so you can kind of see what you can have that's not turnkey, but you can afford it.
But the other side of it too is this listing agent has a fiduciary duty to the seller. They're going to represent the seller. So
Right.
if you're calling the listing agent, if you sign a dual agency, their fiduciary duty is really to represent the seller ultimately.
Hey, look, if
Jared, you want your own.
I understand that.
Yeah,
I
you want your
understand
own
that, but I also-
representative. You want somebody working on your behalf solely that represents you. So I don't know why you would want to go ahead and you have to have an expert. They know the ins and outs. They know the neighborhood. They might know the other realtor, have had transactions with them, have a nice relationship where they could talk honestly with them and say, hey, listen, we're coming in with this. What are our chances? It might cost you more money to do it the way you're doing it.
Like Michigan is one of the few
time.
states actually that still allows dual agency
Right.
on real estate. And there's some agencies in Michigan that are getting away from that. They will not have dual agency because you're not properly represented, and that's the truth.
Fair enough. Hey, Jared, you get last word. Give me 30 seconds. I'll let you rebuttal.
I'll give you this. I thought my agent was good. It's just the market was tough back when I was looking. I wasn't just looking in Royal Oak. I was looking in Berkeley, Clawson, Beverly Hills.
Yeah.
But every house I had to go to, I got outbidded, and the range of price I'm looking for, to me the inventory's not that great because there's so many people looking. I'll say between the $300,000 to $400,000 range. So it's just an idea because I have a cousin in Florida who does real estate.
Jared, I'm going to wrap
And he
you up.
said-
I gave you 30-second rebuttal. I'm going to call. Jared's great, though. I'm going to follow up with him. Let me say this,
Unfortunately, we're up
Beck.
against it right now.
He's in the most competitive times 2 years ago, in the most competitive area in Southeast Michigan, right there, the Woodward Corridor. So, yeah, he ran up against us.
He
But
ran
no
up against
doubt
it.
we can get him hooked up with you. You get final word, Rita.
Absolutely. Guess what? Beginning conversations, even though that was a competitive time, like I said, there's other options. And if we're talking about those other options when you're buying and you're realistic about those options, then guess what? We can find you a place. It might take a little bit of time.
Yeah, and you won't have to be as frustrated.
Yeah.
But that was a great call because that really is a buyer's experience right
It
now. There's a
is.
lot of buyer fatigue, especially first time home buyer. So we're going to call him. We're going to set him up the right way this time with the right
Yes.
people.
All right, we're going to thank Tarita Boone and her team for coming in
Yes,
today. Hey,
thank you
Tarita,
for
you're
having
great.
Shout out to Robert, too, our
Thank
longtime
you.
listener. He's always listening. Shout out to Robert. I know you're listening, and I will talk to you after the show.
Yeah,
Be
shout
sure
out
to
to
call-
Mike Schwartz, Home Interior Warehouse downtown, Wall Lake with Jackie and Mike and everybody out
Oh,
there.
yeah, there's a lot going on out here. Be
Oh,
sure to call
yeah.
Capital Mortgage Funding, 1-800-LOW-RATE. Get a real approval letter. Be competitive. Have confidence. And we'll see you next Saturday. Keep it here. We got Mark Ryan, Pat Caputo. They got sports.